And we saw a little bit yesterday in the US equity market how risk assets might react to any disappointment from the Fed. Are equity markets right now pricing in anything more than one rate cut?
Well, I think the market is certainly baying for rate cuts. I mean, I think a couple of rate cuts. Yeah, I think a couple of rate cuts are currently priced in. And I think, certainly the market has become somewhat addicted to easy money and a kind of accommodative stance from the Fed. So, the Fed is in quite a tricky position, really, because, we saw in December what happened when, there were kind of fears that the market wouldn't get what it wanted. You saw extreme volatility. And I think that spooked the Fed, and therefore, they changed to a much more dovish stance, hence the pivot, at the beginning of the year, which has given additional fuel to markets. But whether, obviously, these rate cuts and the sort of more accommodative stance will have the desired effect remains to be seen, because it's like any addiction, coming off the addiction is always brutal. So eventually the music's going to stop.
And it looks as if, Catherine, good morning to you. It's Manis in Dubai. It looks as if the music has certainly stopped from the analysts on the earnings side. Have a look at this. This is global earnings downgrades, and they're outpacing by the most since January. So to a certain extent, the equity analysts, they're front running this slowdown. Do you share that this sort of doom and gloom that earnings will drop? This is the Citigroup Global Earnings Revision Index, by the way. It's outpacing the most against upgrades since January.
Well, what we can certainly say is, we speak a lot to company management through our global sector analysts, and certainly some of the outlook for these companies is somewhat cautious. And that does give us cause for concern that, we've been in a pretty kind of Goldilocks type scenario for some time, but that's not going to last forever. And that is going to feed through to weaker earnings.
When we had Gina Martin-Adams from Bloomberg Intelligence on the set yesterday, she said a lot of the run-up that we've seen in equity since May has actually been simply a hunt for yield, with bond yields as low as they are. Would you agree with that? And if so, how much further does the rally have to run?
Well, I mean, my view is certainly that the rally has been really driven by this kind of hope around everything seems to really revolve around the central banks. I mean, to some extent, yes, there has been a hunt for yield. And to some extent, we've also been benefiting from carry-type strategies within our portfolio. But I also think, so much hope has been built into what the central banks will do. There's this kind of implicit put from the central banks, and there's a feeling that this can carry on. And it has been going on, let's face it, for, a long, long time, ever since the global financial crisis, that we've been on this sort of merry-go-round of QE and now obviously more latterly trying to withdraw some of that stimulus.